Welcome back, guys. The PulseChain ecosystem is pumping nicely. Let's look at GoPulse.com. We've got a 10% pump on PulseChain, 12% PulseX, 10% INC over $1.23 now. HEX, incredible moves lately, incredible moves. 200%, 250% on HEX, almost caught up to parity for a brief moment there. A PHEX is 40% above an HEX, okay? And PHEX also is up 12%. HEX is up some ungodly amount. I don't even know. Let's go check on the chart. Wow, look at those green candles, guys. And just so you guys know, I'm always using the daily chart. Don't get your mind off the 15-minute chart, please. Please, 15-minute, even the 1 hour chart. You're not playing the right games. You want to just be on, I like to use daily at the minimum, okay? Sometimes even weekly. 280% in the past 5 days. Yeah, so HEX has had a phenomenal week, 281%. 6 days back down to 200%. Still sitting comfortably at 200%. But guys, I know this is fun. This is really fun. This is exciting. We're pumping a lot. I want to remind people that through all the excitement, this is only a small taste of what can actually happen in a full-on bull market, okay? We're all partying over here, taking our victory lap. Yes, we should be doing that. It's great. I'm super happy that the whole ecosystem is pumping. So many coins under the umbrella of PulseChain as well. But I want to remind everybody of something that people don't like to hear, which is that long-term holders actually win, okay? Long-term holders are who actually won. In HEX, for example, people that didn't sell their HEX, people that didn't give up on it or try to flip and trade and give into the fear and follow the narratives every single day. You know, doom scrolling through Twitter and reading everybody's fear, uncertainty, and doubts. And then that adds to your anxiety. And then you start to believe these random people on the internet, many of which are not successful and will not be successful because, you know, they have weak paper hands. And so I'm not here to say, you know, dance on the graves of anybody that's into that HEX, PHEX debate. That's not what this is about. I want to bring the conversation back to just remind everybody that long-term holding wins and that when your coins go up, it's amazing, right? I love the feeling of these green candles. Man, I love the smell of green candles in the morning. You guys know this. That's why we're all here. But these green candles, sometimes they give people the ability to say, I made so much money. I'm a genius. Now I get to go degen and go day trading and jumping into 50 other coins. And really, I want to bring people the message of stay on target. Stay focused on your core positions. Now, your core positions don't have to be my core positions. You should know mine already. HEX, Pulse, PulseX, PHEX, and HEX. Never sold any HEX, all right? And I've got maybe 5, 6, 7 other coins. I might have maybe 10 or 11 total coins in my portfolio, but we're going to talk about that in a minute. Stay tuned. I just want to remind everybody that you can stake your HEX, right? There's a lot of liquid HEX holders out there that might be tempted to sell or do this or that or trade, you know, do some of these swing trades. Maybe you don't think it's trading, but the fact that your HEX is even liquid at all, you know, this is unpopular to say, but the only people that have really ever won in all of crypto, in all of HEX specifically, and in life are the long-term holders, okay? Do you think Warren Buffett got rich day trading? No, he just bought good stuff and he held it like forever. The dude is 93 years old now and he's one of the richest guys ever. HEX allows you to protect yourself from your own psychology, and people don't realize that, but the real winners are the staking class, and the people that I know that have made money in HEX that probably are going to do it all over again in this bull market are the people that didn't have the ability to sell because they were locked up. So it protected themselves from their own worst enemy, which is also themselves, because shiny object syndrome, trading, you get tempted. Everybody's got a coin to show you, and we got to be honest about how many of these are actually going to outperform, you know, the big 3 or 4 within the PulseChain umbrella ecosystem. Yeah, there might be some other one-offs that we're not going to predict those, okay? We're not going to predict the black swan, you know, random single AI coin that outshines everything. Look, if you're in this ecosystem, the whole point of staking was to lock up, to get yield and get paid to hold through bull or bear markets. And you can time your stake, right? I know a lot of people, they're trying to time their stakes, maybe late 24, maybe early 25. Maybe late 25, you can make a couple. Obviously, you make a ladder with this stuff because you don't want to have to time the exact, nobody can predict the exact bottom or top, but you can make a couple of stakes around where you think the top is going to be. And then if 1 or 2 or 3 of those stakes hit near, you know, incredible gains, let's say 50, 100x from here, then congratulations, you take profit. But you got to admit to yourself that not all of your stakes are going to win, right? I had stakes expiring, you know, near September 2021 when HEX was at 50 cents. And then I also had stakes expiring the entire way down, and including the bottom right now. I've still got stakes coming out near the bottom, which I often don't like to sell the bottom. You know, I'll just typically restake or put them to work in other protocols or something. But you guys can stake your HEX, and there's a lot of liquid holders that still haven't learned this, and I just think need to be taught. You got to go to go.hex.com, okay? app.icosa.pro is another option. That one lets you mint your Hedron. But I know a lot of people out there aren't using this, and they're doomed to kind of fail because they're going to get tempted to be shaken out early or not stick to their word. And we even see people emergency ending their stakes, which you should never do, by the way, if you're brand new to HEX. I do have a course, HEX Passive Income, but one of the main things you should know about HEX is you don't end a stake early. Look what happens when I click this red button. Boom, giant, red and yellow, candy cane, crazy looking emergency box. It says, are you sure you really want to do this? You idiot. Don't do this. Don't click this button. You could lose everything. It's basically, that's what it's telling you. Okay. So for new people coming in, do not end your stake early. There are heavy penalties if you end a HEX stake early. It has to do with how much of the stake you've completed. But some people might not know that. There might be a lot of new people getting in, especially when you see HEX, ripping 280% in a week. EHEX, that is. And the whole ecosystem is on fire right now. So this is going to bring new people in. And a lot of these new people might not understand long-term holding. So look, a lot of shiny objects are coming up, a lot of new protocols. We're going to talk about diversification and kind of the myth of diversification in a minute. But, this is unpopular to say because people make money on shilling you trading courses. They make money selling you to Bybit. But the real winners, okay, the winners that I know personally, myself included, are the long-term holders. And a lot of us are staked in HEX, making yield so that we can protect us from our own psychology. And we're not trading. We're not trading it all away. And what's really important too is that if you have liquid HEX, you buy all this time to just overthink and doubt and talk about and wonder, oh, what if I get into this new thing? What if I get into that new thing? A lot of times these things come and go, and you just ended up wasting a whole bunch of time overthinking when you can simplify the whole process for you and just make some stakes, okay? I'm not saying just stake everything 15 years. No, that's ridiculous, okay? I've got 1 or 2, maybe 15-year stakes, but most of mine are laddered, staggered in between that. And so you can make your stakes. It's not like people might get afraid that somehow staking HEX prevents them from taking profit. It doesn't if you ladder it correctly. If you stagger your HEX stakes maybe every quarter in 2024, 2025, for example, you don't have to pick the exact top, and you will have things expiring, and it'll give you this time period in which to collect your thoughts, think long and hard about, okay, well, we've gone up 50x. Maybe with this HEX stake, maybe I should sell some of it, maybe half of it, maybe all of it, and then restake some other portion of it. Maybe I'll sell the whole thing. But when you're on this slower time frame, it forces your brain to slow down and make more sound decisions and not rush in. Because look, guys, you're going to get pitched hundreds of coins through the bull and the bear. You're getting bombarded with new coins right now, and it's going to keep on happening. So the more you pay attention to all these random little poop coins on Twitter, on Telegram especially, the more likely you are to fall for, giving away what's called kind of your blue chips, right? I know a lot of people wouldn't call these blue chips, but within the PulseChain ecosystem, this screen right here, these are the blue chips. HEX, Pulse, PulseX, INC, not so much, okay? I don't look at INC the same way as I look at PulseX, Pulse, and HEX. But you want to get into the coins where most of the attention within the ecosystem is. And look, I know it's also easy to get distracted with yield farming. A lot of people are wondering, oh, should I be yield farming or should I not be? It really just depends. Look, you're going to be fine buying and holding this stuff anyway. The lion's share of the gains in every bull market, in all these cycles, okay, the gains primarily come from the price appreciation. And then the yield you get on top, like from HEX staking or from yield farming, that's a nice bonus on top of it. All right, but let's go to the Earn tab. This is PulseX.com, app.pulsex.com. People always want to know, should I be yield farming? I think a lot of people are, maybe uncomfortable not knowing about yield farming, and they think they're missing out. If it's too confusing for you, really don't worry about it. I mean, making 8.5% APY is cool. Let's say you join the PulseX pair, but if it freaks you out, if you don't understand impermanent loss, or if the impermanent loss bothers you, or you feel like you have to check up on this all the time, maybe it's not worth for you in particular to have that mental anguish of worrying about this all the time. Now, if you are going to join a yield farm, I do. And that's the reason I'm not totally 100% staked anymore, is because I like yield farming now. And I've made a lot of money on yield farming. And you can too, if you're comfortable sitting in these positions while you temporarily have impermanent loss. And then you have to wait until the future for that impermanent loss to fluctuate. And maybe it never will. So you have to be okay with that level of uncertainty to do yield farming. But just because I do it doesn't mean you have to. All right. 80% of people out there are probably better off not overthinking things, not jumping into yield farms just because you see, 56% APY and you say, oh, that's a big number. But did you know that if you put your money in this farm, for example, USDC Pulse, and the bull market takes off, well, you're going to probably have some impermanent loss because you're going to be left with less Pulse and more dollars. And the price of Pulse is going to shoot way up. And then you're going to be sad because when you pull out your pair, you're going to have more dollars and less Pulse. And you're going to have more of the thing that's worth $1 and less of the thing that just went up. 100x in price. So be wary. I mean, I'm not saying the bull market is back, but it does feel like we're on the cusp of what could be. And again, I'm reluctant to say that because I'm in the disbelief phase myself personally, but I would hate for people to get stuck in some of these yield farm pairs and not understand that, these pairs have been actually pretty good. Like the stablecoin pulse pairs have been good for the past 4 months just because we've flatlined and it's been boring, right? But when the prices go up again, if pulse skyrockets, you're going to end up being left with more of the less popular coin and less of the more popular coin. That's what impermanent loss means. All right. And there's plenty of other yield farms too. PHUX. I love this one over here. I've been making a lot of money on PHUX, but just because I'm saying that doesn't mean you have to go chasing that and do everything I do. So the reason I'm able to use stuff like this and feel okay about it is because first of all, I've spent 9 years in crypto. Second of all, I'm okay with uncertainty. And also my bags are full to a degree where I'm okay divesting some into alternative strategies. And of course, I do teach things like yield farming in my HEX passive income course, link down below if you want to learn that. I've got a ton of free videos about yield farming as well, how to stay safe doing it, or just what to look out for. But again, 80% of people out there, if you don't have your core bags, right? If you don't have your core positions, I'm assuming, look, we don't have to like the same coins, but if you're investing in the PulseChain ecosystem, the core coins are PLS itself, HEX and EHEX, that's PulseChain HEX and Ethereum version HEX, and then PulseX. Okay, these 4 coins right here, they're probably going to capture the majority of the new attention and economic energy coming in. All right, other coins are going to also do very well as well. But there's this idea of diversifying, right? People think, oh, I got to get diversified. And it is a myth. Guys, it's a myth when we're talking about the context of the PulseChain umbrella ecosystem. Real diversifying means I've got some stocks, I've got some bonds, I've got some gold, commodities, I've got some crypto, and maybe I've got some real estate. It's diversifying in between asset classes, all right? Now, people think that, people take that term and they try to apply it to PulseChain, and they think that they're being all smart and they're saying, oh, I'm diversifying. No, they're not. They're buying 20 poop coins, and 10 of them are going to do terribly, and they would have been much better off concentrating their economic energy on a couple of things that are a little bit more likely to succeed. Now, I think these are likely to succeed. You can disagree with me all you want. All right. That's just what I've placed my bets on. And of course, like I said, I've got, 7 or 8 other coins maybe. I've got some PHUX coin because I'm earning yield over here. But does that mean you have to go rushing and aping into PHUX coin? No, especially not if you don't understand what it is or what it does. If you want to learn, I've got free videos. I've got HEX passive income. But look, I'll just tell you right now, when it comes to yield farming, okay, this is like the Pulse, for example, this is the PulseX PLS pair, okay? This is the most popular pair, highly liquid, $31 million liquidity on PulseX. And here it is on Dex Screener, okay? What you want to look for in the ratio is range-bound liquidity in the ratio. Range-bound liquidity in the ratio. So I'll tell you guys one more time. I've said this on my previous videos repeatedly, but in order to do yield farming safe, you're betting on the fact that both of these coins are going to go up and they're going to be locked within some ratio and they're going to bounce around within a ratio range. So you want a range-bound ratio. Now to do that, you click this button up here. You switch to price in WPLS. You see where my mouse is? You click this button and you transform the chart. This is now the ratio chart. Okay, so instead of the US dollar price chart, look at the y-axis. I'm looking at the ratio of Pulse to PulseX. And what this chart is telling me is that one PulseX is worth 27%, 0.27 of a pulse. And we could see that right now it looks like the PulseX pulse ratio is bouncing somewhere between 1/4 and 1/2. And if we take the inverse, we're basically saying that Pulse is typically worth about anywhere from 2 PulseX to 4 PulseX. It bounces around from 2 to 4 if we take the inverse. So I am betting on the fact that, and so far it's been a pretty good bet because it looks like we bounced right off that 25% mark. I'm betting that what I want to see for less impermanent loss is I want to see the price continue to bounce around in this range. Range-bound ratios is what you're looking for. Ideally, you would like extremely high volatility, a lot of people trading and nothing happening in the price. The price flatlines. That's what you would ideally want. And if that doesn't make sense to you, I talk about this in past videos or courses and all that. But just this idea of diversifying is, do not think that, just because that sounds smart, just because it works in traditional finance. That's what they tell people, right? But if you're just starting out and you want to really capitalize on some moonshots, some crypto that really goes up, you're not going to get that buying 30 coins within one ecosystem that all goes up and down together. All these things, for the most part, are liquidity locked, and you want the ones, look over here, these yield farms were chosen for a reason. PulseX and HEX are heavily bonded to PLS. Ethereum is heavily bonded to PLS. Why? It's because if the Ethereum price goes up in a bull market, it can drag Pulse up with it, and vice versa. Same thing with these. If any of these coins go up, if people ape into HEX or they rush into PulseX, the rising tide lifts all ships. So liquidity bonding all these coins together were chosen very deliberately, okay, to prevent people dumping and to move these prices up in lockstep with each other. You don't see random poop coins over here. Why? Because there's not enough economic energy to be pairing all these poop coins together. These yield farms were chosen very deliberately. They are, again, what I would consider the blue chips. So just be careful that, just because a coin is in the PulseChain ecosystem doesn't mean it gets to pump nearly as much. Now, a lot of these coins, yeah, sure, they're going to do pretty good. But how many are really going to outperform the big three? I'm skeptical on a lot of them. Now, some might. And, someone's going to point to this video 1 year later and point to the one coin and say, haha, you were wrong. And it's like, everyone always says that. Just like, there's like one day trader that usually is LARPing. He usually lost money, but they post online as if there's some amazing day trader and they say, you shouldn't listen to all those guys that tell you trading is bad. And what people don't realize is that 99%, maybe I'll be generous, maybe 95% of people that lose money, all the dead bodies, you don't hear from them. It's called silent evidence. You don't hear from them because they're dead. They're floating by you. People don't brag when they lost money. When people make a bunch of money, they get real loud, or sometimes they just get real loud because they're lying to you, because anybody could say whatever they want on the internet. All right, so just be wary of that as we potentially go into a bull market. You're going to have a lot of people, shouting loud, trying to distract you, getting you into various things. And if you want to invest in the PulseChain ecosystem, I really believe that this is probably the best place to start. Again, HEX, Pulse, PulseX. You can divest a little bit, but again, I can afford to divest being at a later stage of maturity in my crypto career. If you're just starting out, it doesn't make sense to get into even 10 coins, right? You probably want to concentrate it even less than that, okay, in terms of your economic energy. So once you can afford to divest, let's say you've got $100,000 of Pulse, PulseX, and HEX, and you're like, okay, I've got $300,000 in my bag now. Maybe now I can afford to take some $5,000 bets here and there on different altcoins, okay? So that's what I'm saying. When you're just starting out, it really depends on how much capital you have, but diversification is a myth. And number two, you have to afford to diversify in the first place. You have to be in a financial position to explore new opportunities. And if you're starting out with, $10,000 and you're putting $500 into 20 coins, let's say, a lot of those coins are not going to hit as hard as it would have if you just concentrated, let's say, $2,000 maybe into 5 coins, for example. So look over here, guys. We've got the PulseChain ecosystem chart. This is by no means all the coins. Okay, so don't get mad if you don't see your coin here. This is just somebody made this. I didn't even make it. Okay, somebody else made this thing. It's an ecosystem chart showing just how many projects we have and counting. Guys, PulseChain is incredible. 160 plus content creators. There's probably over 300 tokens right now. Okay, there's clearly a lot missing here. This was made a while ago as well. But look at all these coins we have, and it doesn't mean you don't gain exposure to the PulseChain ecosystem by going out and just buying every single one of these. Now, that should be obvious to a lot of people, but again, there's going to be new people flooding in here. And if you get distracted, it's called shiny object syndrome, okay? I talk about it in my course. If you're just buying everything in here, everything with a logo and a price chart and a pretty picture of a dog or a monkey or whatever, you got to understand what they do and what's going to keep people's attention. See, coins pump a lot of times really. What they do is important, but the narrative behind them, the product market fit, the problem they're addressing, that's even more important. And at the end of the day, a lot of it comes down to the attention that they can maintain. So the segment of people's consciousness that certain coins can capture for a longer period of time are going to have more lasting value, more positive price performance. So which one, look, when it all really boils down to is crypto is a battle of narrative memes. And Richard Hart says that, but what does he mean? It's storytelling, it's solving a problem, and it's a community behind you. It's a battle for attention. We got to be honest with ourselves here. Is, poop coin XYZ or banana bread dill pickle pudding coin, is that going to be around for the next 10 years? Or is that just a joke that some grifter is trying to make to trick you into buying it? He sells the top on you 2 months later. It never recovers, and you're left holding the bag because, look, there's real people with bad intentions, and then there's even people with good intentions that just make something lackluster that doesn't maintain attention for the long term. So I talk about things I like. I talk about things that I think add value to to my core positions. Okay, I talk about things that add value to these core positions. And sometimes that involves another token. Sure, sometimes that does involve, a platform revenue generating token or whatever. You know what I mean? Like Fame is an example, okay? But just because I have more than, the original 3 or 4 tokens, PHEX, EHEX, PulseChain, PulseX, doesn't mean, I have some criteria and standards, okay? You don't just want to ape into everything just because you read the white paper. All right, I did that in 2017. I've done that before. I even made mistakes in the past bull market, right? I bought stupid stuff. Now, obviously, luckily, I made way more, incredibly, so much more to offset those tiny losses. But, I find myself falling for some stupid narratives, some short-term things that don't last long, okay? And it's only going to get worse when the candles are green, too. I mean, you think it's bad now, it's going to get a lot worse because people are going to be pointing to giant green candles on their, 15-minute chart for their coin that's like a month old. And you might fall for it and get tricked, especially if you are new to crypto. So coins pump based on how much consciousness and attention they can capture for a long period of time. And there's going to be hundreds and hundreds of PulseChain ecosystem coins. Be honest with yourself about which ones you really think are going to make it and which ones at the end of the day are just wishful thinking. And just because you want them to make it, does it really seem like they've got all the right components in place to solve a problem, to have product market fit, to have a community, to have safe, solid code? Do they have everything that, the core coins have? And some of them have, some of them are kind of attractive, but very, very few. Okay. Very, very few. So it's about saying no to a lot of things as well. And finally, I'm going to end on this point, guys. Bull markets, when they come, they can be very fun, but they can also be very confusing and they can be short lived. Now you might go ahead and say, oh, look, from bottom to top here, it was 1,066 days. That was so much time. We had like 2 years of bull market. Not really. Okay. Like when you have bull runs, it doesn't feel like look at this, 1,066 days. It doesn't feel like 1,066 days of just straight permanent orgasm. Okay, so what it's going to feel like is you've got these 5 awesome months, you're euphoric, yeah. And I think a lot of people probably wish they took some profit over here. This is the Bitcoin chart in the last cycle because look what happened. Look what happened within the context of the bull market. You could still say this was a bull market, right? But within that bull market, we did a 70% drop where Bitcoin fell from 13K almost down to $4,000 again. Imagine all the fear, uncertainty, and doubt. Imagine all the haters coming back out of the woodwork. Haha, Bitcoin is dead. I told you it was never going to work. And then who would have thought that right after that, we would absolutely rip back up to $66,000. Okay. And it's not a straight shot up. So you get, 5 good months right here and the euphoria is on, but I think people should be taking profit on those euphoria. Like if you get 5 monthly green candles in a row, consider taking maybe a little bit of profit, okay? Because then we could dip 70% within the context of a bull, and you'd be happy that you took a little profit there, wouldn't you? So then, you don't have to sell your whole bag, right? Because look what happened right after this. We went back up again, and then we had another period of 1, 2, 3, 4, 5, 6 consecutive green months, and that was massive euphoria, right? But when we have these stretches of, and I'm on the monthly chart showing you that I'm zooming out. That's actually how much I zoom out. Because when you have 6 months in a row of straight green candles, you can't trick yourself into thinking that this is just going to go up forever. All right. And of course, everybody wishes they took more profit in the last bull, myself included. I did pretty all right. Okay. I did pretty good. Look, a lot of people are thinking this way now too, which means maybe if everybody's going to be scared at 6 green candles, maybe they're all going to sell at 5 green candles. Maybe you should start thinking about taking profit maybe a little bit after 4 good green candles, right? If we have 4 up months in a row, I might decide to take a little profit there, okay? I'm talking about the PulseChain chart and the HEX chart and all that. Obviously, this is Bitcoin here, okay? But look, this 2017 bubble right here, I know we had a lot of green months with almost no downside. And, a lot of people still managed to lose money along this, what looks like a straight shot up, doesn't it? There were very few times where we had a down month, but it's only down, 20, 30%, maybe 40% here. And then it was just up only for... This was also 1,065 days. Okay, but this one was a lot more parabolic. The most recent cycle we had was a huge fake out. And they're going to get less and less predictable, I think, over time. We also have this recency bias, so we look at the very last cycle. But look, if you look in the olden days, we had crazy green candles and green monthly candles here. Crazy green monthly candles, and it gets a little bit harder to predict over time. So the last cycle actually makes the 2017 cycle look like it would have been easy to deal with. And it still wasn't easy to deal with. Look at the cycle before that. Look at how huge these giant green candles were on the cycle before that. You don't have any candles of this size in the 2017 bubble, okay? And they just get weirder and weirder. So yeah, 4-year cycle might continue to play out, but it breaks down. Like history rhymes, but it doesn't repeat perfectly. So we can't just look to the past and say, oh, well, this cycle did, 5 monthly greens and then down 70 and then a whole bunch of greens after that. You can't just expect it's going to be the same way. So I don't know what this cycle is going to look like. All right. I don't know. I have a feeling that it might get cut short just due to the fact that, the money printer, when it turns back on, we could be overdue for a recession. Okay. The USA is in a ton of debt, $33 trillion of debt. There's geopolitical instability everywhere. And, when they stop raising rates, probably early 2024, sometimes there's a 10-month lag after that where it catches up to the rest of the economy. And we don't know if, Larry Fink and BlackRock, if they're going to be able to offload all their Bitcoin, in the year of 2024. The halvening and the ETFs are obviously going to be bullish events. But I'm saying, we got to be ready for anything. Okay. I say survive till 25. You might want to even take some profit in mid to late 24, depending on how many green candles we're getting and how euphoric we're feeling. So it's fun to celebrate now, but I also just want to give people, some warning that none of the cycles really repeat the same way. If everybody, including myself, that bear market is so fresh in my head, right? And it's fresh in everybody's head too. So everyone's thinking the same way. Everybody's probably a little bit more ready to take profit this time. So what does that tell you is that you should be even more skeptical about, especially with Bitcoin going up anything near the amount that Bitcoin has gone up in the past. Again, I've been saying this, that I'd be very surprised if Bitcoin breaks 120K, which would be like a 2x from the previous all-time high almost. And a lot of people are going to be calling for $1 million Bitcoin like they always do. But just be wary about that. So bull markets can be a lot of fun, but they can also go quick. And just try to reflect on how you're feeling at the time. For example, right now, I'm feeling disbelief. I cannot believe how hard we're pumping over here on this price chart. Look at all these prices. They're glorious. And because I'm thinking about how I'm thinking, I can actually analyze and say, okay, well, maybe I am in disbelief, which means maybe we are off to the races again. But when you're feeling euphoria, try to just take a breath and realize that you are in euphoria. Because a lot of people, myself included, right? We don't realize that the good times are here. We're having a great time, but we're not realizing, oh, this is actually the euphoria phase. Maybe I should actually take some profit. I guess it's going to be hard to predict exactly how things are going to play out. Okay, all I'm trying to say is think about how you're thinking. Enjoy the good green candles now. Enjoy the good times. Let's take a look at this beautiful HEX USD chart one more time. Look at that amazing weekly candle. That's a single weekly candle. You guys, don't get zoomed in too much. Don't even be on the hourly candle. God forbid you're on the 15-minute candle. Remember the long picture. Remember the long-term vision. You could stake your HEX. Just want a friendly reminder right there. The staking class is the winning class. They're getting all the inflation. They're getting all the yield. People are making crazy yield right now, and you don't have to stake one giant 15-year, okay? You could try to time it in maybe late 24, early 25, maybe late 25, because nobody knows when the bull's going to come. And when it comes, you want these stakes to be expiring so you can think about, what to do with them. It gives you more time, and you're not just sitting there liquid and distracted by 50 million other poop coins and, wondering, being a slave to your emotions and going along with the hive mind. So think about how you're thinking. Don't overcomplicate it. You don't have to do yield farming, but you can. I do have a course, but I tried to tell you the basic gist of it. Just don't overcomplicate your strategy, all right? And don't go buying all these coins just because you can. Think long and hard about what you're getting yourself into. If you found this valuable, make sure to like, subscribe, leave a comment, share the video with somebody that you want to onboard into crypto. It all helps the algorithm, and it takes you less than 1 minute. Finally, if you're brand new to crypto, hexpassiveincome.com, link below. This course is specifically for you. If you're a crypto veteran, you could also sell the course, make a referral link, and get 40%. But this is everything I know from zero to hero. It's an amazing course. Amazing value too. Worth way more than 2 hours of my time. Tons of video content, 24 plus hours of video content, 37 lessons, and I'm always keeping it up to date. You could also join my Patreon, my Discord channel, if you want to talk to me one-on-one for more personalized questions and faster response times and all that. So I'll see you on the next one.